Want to get some in-depth analysis right now of what's going on in the market. So we're calling in our pal David Dahl, oversees $2 billion as CEO of Canale Trust, and joining us once again from Houston with some thoughts and some stock picks as well. A winning combination always. David, good to see you. Well, we had this Friday thing, and now we have something of a rebound on Monday. What do you make of it all?
Well, today was a nice regroup, Mike. After the action that we saw in the markets on Friday, and especially with the futures opening up pretty low here this morning, for the markets to have a little charisma, to be pretty solid through lunchtime and then finish it off in the positive territory for the day, that's pretty good follow-through. So we look at it as a market continuing to deal with a Fed that's being accommodative and trying to make sure that we don't slip further into an economic malaise brought about by subprime.
The key word, economic malaise. Yeah. You did not use that other word. So, and I'm looking through the research here, and I get the sense that you at this point are thinking slowdown, but not necessarily recession.
Indeed. When we last chatted back in September, we thought reports of this economy and with it the market's demise were premature. We see an economy that's slowing, but still, when we follow the dominoes, we see consumer spending, and that comes about because of jobs. From that consumer spending, it plays out to the economy and earnings in the markets. Until we see a chink in the armor that tells us that jobs are not being created, until we see consumer spending really pull back, not just in the housing-related sectors, but take a look at American Express's earnings just released. They show us the consumer is continuing to spend at about a 3–4% clip, and that's going to be healthy for the economy overall.
But you got politics, David. We're in a political year. Going to be with us for a while. Where does that take us, do you think?
Well, 2008 is going to be a very interesting year. You know, we look at four key things that a government does that impacts investors and consumers, Mike, and those are taxes, regulation, tariffs and trade, and maybe incomes policy. And we're not liking how we see the discussion on any one of those four from either the Republicans or Democrats, especially on the tax policy, that which has been so beneficial to markets when it comes to present valuing the future returns of equities. Any type of directional change in tax policy we think spells bad news for the markets.
Okay, we got some stock picks here, David. Let's go through about 30 seconds of each, if you would. And you got a new buy for you right now. You got Textron.
Well, this is a key play on what's going on with the dollar. We don't see a lot of strength for the dollar in the near term, and Textron's hitting on all cylinders. That's Bell Helicopter, Cessna business aircraft. We see a company that just had a blowout earnings last week, really threw a great number both on revenue, up 15–16%, earnings that came in at 95 cents, a company that is really doing well and that's capitalizing in its foreign sales.
You got Dell as well, and I get the sense that you believe what Apple can do with consumers, Dell will do with businesses.
Oh, that's exactly right, Mike. Take a look at what we've seen with the announcement today on Apple with Mac and iPods. Dell is a product cycle in business spending. You know, business spending dwarfs consumer individual spending, and we see a product life cycle that comes through, and whether it's Dell or some of the other players that really impact businesses, we see technology spending coming. Dell's up 14% year to date, really starting to turn things around. Don McCarty, as CFO, has done a good job. You know, it's kind of ironic. Here's a company that's supposed to be an IT leader, and they have pretty much been candid and announced that they haven't spent enough in their own IT areas within the finance department, and that's where some of the issues came up.
Okay, David, the last one there is Tiffany. These guys are up almost, what, more than 40% so far this year.
Yeah, exactly. I think it's somewhere between 40 and 45. We talked about that before, Mike. Here's a company that's insulated from some of the issues that impact consumers because of the high-end nature. We got 60% of sales here in the U.S., 40% outside. Of that, half of it's in Japan. We see that they're benefiting from the weaker dollar because for foreigners who come into a Tiffany store with the cachet that this high-end product has, they're buying things on sale, and that is turning into great earnings, up 55% our last quarter. We're going to be 6 weeks or so away from our next quarterly earnings, but we see good things with Tiffany right now for sure.
Okay, David, have to leave it there. Always a pleasure. Be well. It's David Dahl joining us from Canale Trust in Houston, Texas.